everyone, I'm Lien with BK Forex. Today we are going to talk about trading news. Many experts will tell you to avoid trading news. You never know what's going to happen, spreads will widen, and volatility spikes. And in some ways they are right. Trading news can be dangerous, but it can also be very profitable if you know how to do it right. This past week we bought Eurodollar and Aussie dollar after the US inflation report. CPI came in under expectations, showing zero inflation in the month of July. This is a big deal because stubbornly high inflation has been one of the biggest central bank headaches. Now we are finally seeing evidence of price pressures cooling, with the inflation rate coming in at zero against expectations for a modest rise, and the year-over-year rate cooling to 8.5% from 9%. We're finally getting there. Price pressures are finally coming down. When the data was released, the US dollar sold off, and aggressively after the report, just as you can see in this dollar-yen chart. Eurodollar shot higher. You could have just jumped right in on the trade, but for me, one of my rules for trading news is to wait, because patience pays off. Wait 5 minutes after the report for a better price, to avoid the hype, and make sure that you didn't miss something, because too often we have seen a currency pair spike on a good news and then reverse completely, in the seconds thereafter. Because while at first glance the news seemed to be great, there could be other factors at play, like expectations that were misaligned or weakness in the details. So waiting that 5 minutes, make sure that you let the market digest the data and that you are trading and following the real move. So this past week, when the US CPI report came out weak, I waited 5 minutes and then sent an alert to our members to buy euro against the US dollar because the data was dollar negative at 1.0306 on the retrace, like you see in this chart here. So rather than pay up when the report was instantly released, waiting 5 minutes gave us a better price, a great entry that was followed by Eurodollar popping higher. This was a really nice quick trade that earned us a nice tidy 40 pips. I also directed our BK Forex members to buy the Australian dollar against the US dollar at spot 7033 after the CPI report, 5 minutes later. And like euro, we caught the perfect retrace entry. There were also two beautiful buy signals on the Aussie dollar chart, which is why I liked Aussie dollar quite a bit. And as you can see from the trade instructions that I added to this chart, all of my ideas are timestamped. So these are real-time trade calls for our BK Forex members, teaching them at the right places to enter into news trades. I believe that there's basically 3 ways to trade news, or 3 ways that I like to trade news. The first one is what we just talked about. Wait 5 minutes. Make sure that if you want to go long, the standard candle stays green, the news candle stays green. If you want to go short because the news is bad, make sure that the news candle stays red so that you're not caught in some ugly data reversal. Another way is to wait for a break of the news candle high or low. Looking at the same Aussie dollar chart, you would buy on a break of 70.56. With a 20 pip stop, 20 pip target is what I like to use for a quick, low risk, high probability, one-to-one reward trade. In the case of CPI, the real trade was dollar yen. That's a pure dollar trade. You would sell the break of the news candle, which happens where my arrow is pointing at 132.66. Now, you can't always expect a big move after getting in when the initial reaction has happened. But in this case, it did move quite a bit, and 137.03 was the low. The third way is to trade proactively, positioning before the number was released and hoping that you're right, and the trade hits a target on the release. For many, this may be difficult, but every week I publish a calendar for our BK Forex members. I actually tweet about how I prepare the calendars, and these are the big releases to watch every single Friday and Sunday. So I actually called the softer CPI report, as you can see here, because of lower oil prices and peak inflation. I wrote about how oil prices have been trending lower. There's a good chance that data may surprise to the downside. So some of our BK Forex members made money trading the US CPI report proactively and selling dollar yen ahead of the release. Just like you see this nice little testimonial here from one of our members. Now, of course, you can't trade any and all pieces of news. The best news events to trade are inflation, retail sales, and job reports for the US, UK, Canada, Germany, Australia, and New Zealand. Japanese Swiss data is not tradable. I also like to trade the ISM and the PMI reports because these can be very market-moving releases. We normally incorporate these reports as part of our zip trades. But we also live trade big events with our members because trading news is our specialty. We embrace it, we don't avoid it. If you want to learn more about what we do or trade with us every day or get our calendar or access to the zip indicator, I invite you to visit bkforex.com. There's even a special discount link in the description.